You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 23rd day of June, 2020. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. Not only does that method allow you access to the chat box so that you can participate in the discussion, but you receive a reminder right before the show starts via email that has a link in it. And so rather than having to log in, etc., you just join with one-click access. If you're out of the office, away from your desktop, point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. Also, during the show each day, we stream live on YouTube, Facebook, and Twitter. Let's open with a word of prayer. Father, we thank you for your blessings, for your mercy, and for your grace in our lives. We the people, in the land of the free, in the home of the brave, we desperately need you, God, like we've never needed you before. Oh, that we would leave our ways of seeking to be blessed and instead seek to bless others. God, we beg for your guidance and your wisdom for our leaders. We ask you to protect our land from enemies, both within and without. And God, we praise you for the freedom that we have today through the blood of your Son. May your plan be the desire of our nation. In Jesus' name, amen. Okay, let me give you the numbers from around the world. These are the cash markets, the indices, as they're called. And we'll start here in the U.S. Currently, the Dow up 251 points, almost 1%. NASDAQ, all-time historic highs, up 133 points. That's a gain on the session of a little over 1.25%. S&P 500 up 31.5 points, 1%. The Russell 2000 up 6.5 points. It's a gain of about 0.5% on the session. In the commodity basket, crude oil up 19 cents, trading 40.92 last. It's a gain of about 0.5%. Gold up $15.80, trading 17.8220 last. That's a gain of almost 1%. In the Asian markets at the close, Nikkei posted a gain of 111 points. The Shanghai rose 5. The Hang Seng added 396. That's a gain on the Hang Seng of about 1.5%. And in the European markets at the close, FTSE up 75, the DAX up 260, the CAC up 70. Now for the FTSE, that's a gain of 1.25%. For the DAX, it's a gain of over 2%. And for the CAC, a gain of a little over 1.25%. That gives us a green day in Asia, green day in the UK. So far, it's a big green Radio Tuesday here in the US of A. We'll go to Michael now and get a recap of everything that happened this morning in the live training room. If you are ready, Michael. Okay. We'll take that as a negatory. All right. So then, I'll do this. Stand by. Okay, I'm going to drag up. Valerie just sent me over the recap on Logic 247 so far this week. Okay, all right, you ready?
Yeah.
Okay, all right, Michael will take it now, and he'll go over everything that happened this morning in the live training room. And then when I come back, we'll cover the Logic 247 alerts, we'll cover the Concierge Trade Alerts, we'll talk about the canceled China trade deal, or the failed China trade deal, and we'll talk about the WWDC. That is the big annual event for all the Apple fanboys and fan ladies. Michael, it's all yours.
Okay, got it. All right. Good afternoon, everyone. Today is Tuesday, the 23rd day of June 2020. Let's bring over this. And bring up this. Okay. If you have not taken a free trial with us, go to the homepage at CFRN.net. Scroll down to where it says free 5-day trial. Click on that, and you'll be brought to this page, EminiTradingSchool.com. On this page, all that we ask for is your name, your email, your phone number. You can give us this information too, and it will benefit you if you do it. Hit the send button, then you'll be sent a confirmation link. You must click on confirmation link. Right? We don't know that you took the free trial until you click on that. Now, the big deal here is that we don't ask for any credit card information or anything like that. You know, you get to take 5 free days with us before any of that comes into play. Okay. Results. Everybody wants results. Here we go. This spreadsheet goes back to January 2nd of 2013. And we fill it out every day at the end of the session. Today, as I said, is the 23rd day of June 2020. We made 4 ticks in gold today and 15 ticks on the ES. Put us at plus 227.5. That's 1 contract, 2 hours per day. And as you'll see, that's just catching, a fraction of the trades. Today took 21 minutes and 2 trades to get to the goal for the day. At that point, we're up 112.5, and we took a total of 6 trades. So on the month now, we're up $5,344. That's over 17 days, averaging $314 per contract per day. On the year, we're at $41,759. That's over 114 days, averaging $366 per contract per trading day. 2-hour trading day. All right, let's get into what happened and didn't happen. Now, the markets were kind of messy today. You see all this garbage right in here. We didn't have any trade setups in there, and that's good because you don't want to trade when it's like that. This is where people get chewed up. And fortunately, we didn't have any trade setups. We didn't trade it all in there. Once we finally started to move here on gold, we had a close right here above this trend line. Then we picked up 4 ticks on that. Now, if you're doing the YBR trades, there was one here for the leg down. Not one there. One here for this leg up. And all the way over here. One there for that leg up. One here for that leg down. There was one here for this leg down, but the cycle was going up really steep. So you probably want to stay away from that one. The one here would have been a break even. But that was gold. Gold this morning. Let's see, on the euro, I knew he took profit on the euro. I didn't count this, but we got a couple of ticks there. On the euro, let me actually go and see. We got 1 tick, but I didn't count it anyway. During the morning session, it was just, it had this one big leg up and then this one big leg down. And right here, where it tried to continue the trend, we got 1 tick. No, I didn't count that in my spreadsheet. But, let's see. Right here during the break was a shorting opportunity. Just 1. And it would have given you some profit. Okay, now crude oil. Hang on, charts are catching up. Crude oil started out right here, really, really choppy, and made a huge move down, but it didn't give us an opportunity in here. Then it got really choppy again and retraced that whole move all the way up to here. It gave us a shorting opportunity right there and a long opportunity there and there. Now, this one would have given profit. This one would have been break even. This would have been break even. Then during the break, we had a big move down, but it didn't really give us, well, I guess right here, you could have shorted right there to capture a little bit. Now remember, what we're trying to do is get our goal for the day. Now, if your goal is 2 points, 5 points, whatever it is, you're just trying to get the goal for the day. You're not trying to place, 50 trades in a session. And it's important to recognize that. Okay. And so on crude today, that was what we did. Nothing. On the ES, yeah, I'm trying to slide it over. Okay, here we go. We missed this first trade right here on the ES, and then we picked up a few ticks on this one right here. All right, and then we grabbed this one and we picked up 8 ticks on that to put us at plus 11. And then we stopped out, put us back down to plus 3. We had a break even right there. A break even right there. And then we picked up 12 ticks on this one right here. Just 3 points. There was a trade right here, a bounce off the BBC right here that we missed. And then we get into the break. And let's see, during the break, there was a shorting opportunity right there. And another one right there. And that was it. That was it. That was our whole morning. But the markets were really a mess today. We got our goal for the day. We made some profit. And that is why you put the mouse away once you hit your goal for the day. Because it was really messy, and it still is right now. We had some news events today. If we go to here. Now, all the news that came out today, except for flash manufacturing, all the news that came out today was good news. I mean, globally. Look at all those green numbers right there. Even here in the US. So that's a good thing. The economy's coming back. And people are starting to get back into it. Okay. So if you have not taken a free trial with us, go to the homepage at CFRN.net. And right here it says free 5-day trial. Click on that. And you'll be brought to this page, EminiTrainingschool.com. On this page, all we ask for is your name, your email, your phone number. You can tell us your biggest trading challenge so we can tailor one-on-one training just for you. And really, we do the one-on-one training. I have an appointment here in just a little bit. And you hit the send button. And once you hit that send button, you'll be sent a confirmation link. You must click on the confirmation link. Okay? If you don't click the confirmation link, we don't know that you took the free trial. So you must click on that confirmation link. All right. And I guess, we can go back to the spreadsheet really quick. We're up 227 today. It took 21 minutes and 2 trades to get to the goal for the day. At that point, we're up under $12 a contract. On the month now, we're up $5,344. That's over 17 trading days, averaging $314 per contract per 2-hour day, and missing most of the trades. On the year now, we're at $41,759. That's over 114 days, averaging $366 per contract per 2-hour day. Okay. And with that, we can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Okay, good.
I am ready. Okay, recap of the recap.
Today, it took 21 minutes and 2 trades to get to the goal for the day, and at that point, we're up $112.50.
Good job. Now, that's what happened in the last 2 hours in the live training room. What we're about to talk about is what happened in the preceding 22 hours before the live training room since you and I last spoke yesterday about this time. The Concierge Trade Alerts are published every night shortly after the Globex Open. The Logic 247 alerts, those flow around the clock from the moment the markets open Sunday night at 6 p.m. Eastern until they close Friday afternoon at 5 p.m. Eastern. So while the Concierge, which is based on historical price behavior, is a static report good for the entire session, we anticipate multiple triggers at those numbers each session. Logic 247, based on current price action. When those two point at the same important price, important area, that's where you'll typically find your highest probability and lowest risk trade setups. Now, as Michael said when he was doing the recap, it's all about getting your goal for the day. And he's absolutely correct. Now, we are currently in week 99 of Logic 247. I'm going to drag up. I just got the recap in from Valerie. Okay. Now at this time yesterday, we had issued a total of 26 alerts. We had 18 actionable, of which 11% or 2 were stopped out. Today, as of 12:05, we've got a total of 47 alerts issued. We have 34 actionable alerts. 2 have been stopped out, 6% of actionable alerts. Now, one might look at this and go, wow, how in the world could I possibly trade all of those alerts? Well, the answer is simple. You can't. Okay? Remember, your job is to get your goal for the day. So what you have here are 47 unique moments in the markets: S&P, Dow, Russell, NQ, gold, crude. There was even a copper trade Sunday night, I think. 47 individual moments in the market, unique moments in the market, of which 34 turned into moments that could actually be traded based on not risking more than $300 per contract per trade, and less when possible, using our 3-step methodology for establishing the stop. So again, how could one person possibly trade all these alerts? Well, you can't. Don't try to. You might hurt yourself, and that's not even the idea. The idea is for you to get your goal every day. Now, when you start out with us, you start out in SIM, which is where you should start with any methodology or any strategy, because you don't know if it's going to be a profitable strategy for you. I know the website said it's got a 99.99% win ratio or some other, stuff. But you don't know what that's going to translate into, so you approach everything with caution. Our 24/20 blueprint wants you to do 10 consecutive days in a row in Sim, 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you accomplish that, the blueprint gives you the green light to go live with one contract. Your goal then is to increase your account balance by $2,000. The reason for increasing the account balance by $2,000 is so that you can pay for the second contract. 2 points a day is $100 in the S&P. When you add that second contract, that becomes $200 a day. And as you work your way up the ladder, earning each rung, always adding the next contract with profit you earned in the market, by the time you get to 5 contracts, the same 2 points, it's now $500 a day. And as you earn your way up to 10, that actually puts you in the top 3% of wage earners worldwide. Think about that. How could something so simple allow you to earn so much money? Well, according to this, 90% of people who attempt to become consistently profitable traders fail. That's an extraordinary percentage. I don't think even the Navy SEALs, which is one of the toughest jobs on the planet, I don't think they have a 90% washout rate. Yet, 9 out of 10 new traders fail, not because they aren't smart enough. It's for no other reason than they just haven't had someone teach them how to trade. You and I would never think of getting in an airplane and trying to fly somewhere because we don't know how to fly. 2 kinds of people show up at the markets and find them of interest. Some people it's not even interesting to them. They don't even want to hear about it. It's boring, right? But of the percentage of the population that do find the markets fascinating, 9 out of 10 go, whoa, this is crazy, man. I'm going to get rich. And then they fund an account and start clicking the mouse. 1 out of 10 looks at it, tilts their head, and goes, wow, this is an incredible opportunity. I better find somebody who can actually teach me how to do it. See the difference in the thinking? Now, 90% of us walk up, see it, and go, woohoo. 1% or 10%, 1 out of 10, sees it, recognizes the incredible opportunity, but also is astute enough to realize that let's face it, if it were easy, everybody would do it, right? Okay? It's not easy, but it can be simple. Now, part of simple is our methodology and our strategy. The other part of simple is that since Sunday night at 6 p.m. Eastern, all of our traders, even the ones on trial, have received 47 Logic 247 alerts, of which 34 were actionable, of which 2 were stopped out. Now that's 6%. That is not a typical number. Typical is 20% weekly, on average, do get stopped out. Okay? So when we say trading is not easy, but it can be simple, this is part of simple. Not because you're expected to run out and place, 34 separate trades, but because the alerts come to you around the clock. There's always something cooking in the pipeline. So when it's your time to trade, because we have traders around the world, so whether you're in London or Lancaster, PA, when it's your time to trade, whether it's before work or after work, or maybe this is your work, okay? In the channel, there's something fresh cooking, and just like the Concierge Trade Alerts, these will trigger more often than not. You'll see multiple triggers per alert. Now, in the recap, we only track the first trigger if it fits the profile. And remember, that's got to have an entry where you're not required to risk more than $300 per contract per trade. So you got the Concierge Trade Alerts, the static report based on historic price action. You've got the Logic 247 based on current price action coming at you around the clock. So when you have time in your busy day to put on your trading hat, because you're in the business now of learning how to trade for a living, okay? So whatever time you have allocated for that, you'll find inventory, something to work with, either in the CTAs or in the logic channel, okay? And at the same time, you're learning why it's an alert, because the alerts are based upon our methodology and our strategy. You see, our goal is not just to provide you with alerts or for you to piggyback Michael's trades in the live training room. Our end goal is to teach you to spot the trade setups yourself. And when you spot them, you know what to do with them, how to handle them, how to manage them. Okay? It's all part of our very simple strategy. Now, most of you, I'm thinking at this point, have read this book, Trading in the Zone, by Mark Douglas. Mark was a friend of mine. I was honored to know him the final few years of his life. He was one of the good guys, and I still miss him. Now, this book doesn't have any trade setups, doesn't have any methodologies, doesn't have any strategies. This is all about the psychology of trading. It is about understanding that this is a business based on probabilities, and that in order to be a consistently profitable trader, you must have a definable edge. And what is a definable edge? It's the probability of one thing happening more often than another thing. In other words, it's based on price reaching your target more often than it reaches your stop loss. Now, anything better than a coin flip qualifies as a definable edge. But I think after what you just saw with Michael in the recap he did, and this recap here, just for the logic alerts, this is a little bit better than a coin flip, right? Okay. Now, Mark said also in his book that to properly evaluate any trading methodology, any strategy, that you have to have a minimum sample size of 20 trades. That's 20 unique moments in the market. Our sample size has exceeded 20. I think Mark would be proud. As of this morning, our sample size is 4,186 individual trades, individual unique moments in the market. If you've not read this book, try going to audible.com/CFRN. Somebody told me the other day that link was broken. I've got to get with them and have it fixed if it is broken, because as a member of our audience, you can actually get this audio book for free. It's a legitimate copy from Audible. Now, again, there's no charts, no graphs, no indicators, no trade setups, which is why I resisted reading the book for years. People told me, hey, you should read this book. But because there was nothing, I found out there was nothing in there that I could just use the next morning, you know, like fast food. I mean, I wanted something right now that I could just put to work, make money. And so I resisted reading the book. I'll get around to it someday. First, I got to figure out how to make money. Huh. Oh my. If I just read the book first, I'd save myself a lot of torture. I saved myself a lot of time, a lot of treasure. The 3 T's of trading: time, treasure, and torture. Okay. So Mark says you got to have a minimum sample size of 20. We got that. Mark says you got to have a definable edge. Okay, we got that. So on YouTube, when you have a chance, search Mark Douglas Emini. You can also do it on Google. And you'll see this little short video, about 3 minutes, pop up, the missing link. Get a chance, watch that. Now, anyone in the audience who wants to know, well, how do I get in on this? How do I become a part of the family? How can I get Dwayne to speak about me in glowing terms the way he does some of his other traders? Call 949-42-EMINI or send an email to support@cfrn.net. Request a price sheet, a spec sheet. Valerie will get those right out to you. That'll explain everything a passport includes, what it costs, and that's the only thing we have to say. We don't have any upsells. You know, you won't see us come back 2 weeks later with some new discovery, you know, some new indicator, oh, you got to have this. Oh, and by the way, we only have 10 left. Promise you, we'll never insult your intelligence in such a brazen manner as some of these folks do. Okay? We do one thing, we offer one thing. I've been told we do it okay. Pretty good, even. So, get a hold of Valerie. She'll get you the spec sheet, price sheet, and then you can make a decision if what we do is right for you. Trading is not for every person. You know, everyone has to solve the income issue in their life, the money issue in their life, but not everybody's cut out to be a trader. So part of the initial part of your journey is to determine if you have the psychological, physiological makeup to be a trader. Now, some people say that salesmen are born and artists are born, and I think with the artist that's probably true. Some people just have that thing they're born with. Some people are born with a beautiful voice. Me, not so much. Right? I don't. When, at church, during praise and worship, I lip sync because I don't want to freak out the people standing next to me, right? But yet other people, and when they gargle, it sounds good, right? So with trading, there probably are some people that are born with certain qualities like discipline and self-control that make learning to become a trader simpler. But if you feel as if you were not born with any of those kinds of qualities, that doesn't disqualify you, okay? Because again, it's a business based on probabilities, and to take advantage of that, all you need is a definable edge, and then the discipline to use it at the right time, okay? So, let me bring up a chart of the S&P. I'll make a few more points here. Yesterday we looked at the weekly chart. Now, in fact, we put this out yesterday. I think it was either in the pre-market strategy session or it was during this show. I forget, honestly. But this is a weekly chart. The entry was 31.17. This is a big picture kind of guy. And then the final trade to target is 31.47. And so far we've got to 45.75. Now, you look at this and you go, well, that's a weekly chart. What good is that to me? Well, it helps you to put into context where the market is technically, okay? Not fundamentally, not what the newscasters are saying or the economic reports, but what the chart is telling you. That's where the rubber meets the road, at least for us. Okay, so we know about the pandemic sell-off. Here's all-time historic high. That ended up being a red week. Okay. Then we got below the BBC, and no matter what time frame we're on, this green line, bull, bear, cross. Bull, we expect higher prices when above, bear, lower prices when below. So we got below the BBC. We put in our swing low the week of March 27th, and the pandemic recovery began. From a weekly perspective, it wasn't until this week that we actually closed back above the BBC, and then the next week we closed it right back below it, and then back above it. And for those who trade the bigger picture, using our methodology, our strategy, and our indicators, because everything we do, which is one thing, is fluid across all markets and all time frames. Okay, so here you would have been waiting for price to take out that swing high. On this candle, okay, you're waiting on the same thing, right? This candle right here, clearly it's above the BBC. It opened above. You see how these candles are still kind of joined at the hip? This candle actually opens above, takes out the previous swing highs, providing you with a very nice trigger to go long. And we ran up from roughly 29.83 up to 3,200. Okay. Now notice that right here, where we had the bearish cross in the weekly, that's also an area that you would want to be above. So you would bump that up about there. Now, we don't trade weekly charts in the room. We don't trade weekly charts in the alert channel. So again, why am I even bothered to show you this? Because we feel it's important that you know what the larger context is. Okay, multiple time frames are important. Not only will you learn to work in multiple time frames, you'll start to think in multiple time frames. Now, wherever we have a bearish cross like this that leads to substantially lower prices on any time frame, that becomes an important price, important area, right? So this entry has to be above that area, because that area has the potential to be good resistance. On a 30-minute, a 5-minute, a 1 minute. Okay. Now, as I go to the smaller time frames, everything I've said about this chart weekly, it's going to apply to the daily, it's going to apply to the 30-minute. Here's the daily. Okay. Now, all-time historic high, pandemic low. These are daily candles. The previous chart was weekly candles. So there's 5 of these candles inside one of these. Okay. All right. So we got back above the BBC. Same thing. Just this is daily. Leg and a retracement, a leg and a retracement, a leg and a retracement, big leg, where we ran into resistance where we anticipated we would. See, right here was the all-time historic high in the S&P 500 Emini Futures. We had a retracement to the BBC, put in a swing low, and then we went on to put in a new all-time historic high up here. The first indication that we were headed lower, you see how this candle opened and closed below the BBC. The next day we also got the bearish cross. That kind of seals the deal. Now, what happened up here is we created 2 very important levels. What was once support often becomes resistance on every time frame. Okay? And when you have a bullish or bearish cross that leads to a sizable move, there's a very high probability that when price comes back to that area, in this case, we expect that area to be good resistance, just like we expected this area to be good resistance. Now, resistance that price cannot overcome will cause price to turn around like little Mario in the video game, looking for support. Support will always send price looking for resistance. Resistance, okay? Now, we've been fighting the battle of red and falling for 1, 2, 3, 4, 5. This is the 6th day. Red and falling represents resistance. See over here, all the way down, red and falling, all the way down, all the way down. And then on the recovery, blue and climbing, blue and climbing. See how price climbed the back of blue and climbing? Okay. And again over here, right? Did we have some flashes of red? Yeah. Okay. That's just because price pulled back to the BBC. Remember, indicators are a shadow of decisions made by buyers and sellers seconds ago, milliseconds. Am I saying all indicators lag? Price lags. Price lags the actual, when you see a tick on the chart, okay, that's a shadow or a reflection of a decision made by a buyer or seller milliseconds ago. Candlesticks themselves are a graphical representation of investor or trader sentiment for whatever time frame or market you happen to be observing. So as price found support not only at the BBC but at the 24% fib. Now, fibs are not the latest thing to come down the pike. They've been around since the 14th century. It's math, pure math. This doesn't take into consideration trade deals with China, rioting in the streets, a virus that doesn't seem to want to go away. None of that's factored in. It's pure math. From this low to this high, the shallowest Fibonacci price retracement is the 23.6, or we call it the 24. So we pull back to the BBC and the 24, find good support. Off we go. We know red and falling is going to be an issue, and it was. 1 day, 2 day, 3 day, 4 day, yesterday. Now, that's a crudely drawn trend line. Okay, I could have drawn it a number of different ways. Now, Bert did a really great training video years ago on drawing trend lines. He and I were both there, but he did the teaching, and it was just great. I know we got that video somewhere. Don't worry about getting your trend lines perfect. Just draw them. Now, every platform I've ever seen comes with an unlimited amount of, of trend lines in your monthly package. So, see, we could have drawn the trend line like that. So, we're catching these two. We spiked it one day, but look where we closed. That was last Friday. We closed back at the BBC. So, we went from resistance right back to support. Support sent us right back to resistance. Now, yesterday we closed just off the high. We had a near-death experience last night when the announcement was made that the China trade deal had failed. So I'll show you that in just a moment. It's here on this chart. In fact, let me blow it up. I want you to see it. See the wick on this thing? What did it do? Came all the way down to where? Yep, the BBC. And did what? Bounced. Why? Because when price approaches the BBC from above, we expect it to be good support. Like this, like this, like this, like this, and just like last night. Okay? Now, what is between us and all-time historic highs? This swing high? Yesterday, or 2 days ago, Friday, swing high was 31.44.75. Swing high today, 31.45.75. So closing above that high is going to lead us to this high, 31.56.25. Okay, that will be the next real obstacle overhead. If price can get through that area, then the next obstacle is this swing high, 32.1675. Price gets through there, then here's your next obstacle, which then leads to the all-time historic highs, which were done back here. Okay. Now, on this daily chart, right, it just looks like, man, huge day. Okay. But where do you see this? And I'm talking about this candle. The China trade, the failure of the China trade deal was announced, and the S&P went from 3120 to 3060. 3060, 3120, that's 60 points at $50 a point. That's $3,000 per contract traded. Yowza, right? So these gray lines are this week's weekly trading zones. This morning in the strategy session, I decided to leave last week's on because they're still providing us with guidance. Okay. Now, you'll notice here, as we get above this zone from last week at 73.74, put in a leg and a retracement to the BBC. Leg, retracement. Boom. Now, here, right? Where do we come back to? Right back to the weekly trading zone. Price is always trying to get to a weekly trading zone. From the moment the market's open, Sunday night at 6 to Friday afternoon at 5 p.m. Eastern, price is on the move, on the prowl, on the hunt, trying to break something, take out something. From here, we can see the price is either going to try to take out this swing high or this swing low. All we have to do is position ourselves on the right side of the market. Now, what's the right side? Well, that's the side that the market has chosen. If the market is trying to get to a weekly trading zone overhead, well, we want to be long. And if price is trying to get to a weekly trading zone below, obviously, we want to be short. Price is above the BBC, you only think long. Price is below, you only think short. Surely it can't be that simple, but it actually is. Okay. Now, this is why you always need hard stops. Okay. You could have been in some little trade up here, minding your business. Maybe you're just going to clip a couple points, be done for the night, right? And all of a sudden, this thing just slams down, right? Hard stop, hard physical stop. And this part's very important for those of you who are doing really well. Do not keep more money in your trading account than is required to put on and take off whatever number of contracts that you've earned the right to trade. Okay? If you're trading, let's create a profile here. Let's say you're an S&P day trader, okay? And you've earned the right to trade 5 contracts. Okay, so you look, whoever you're with, you look at your margins. Let's just say the margin's $1,000 for a day trade on the S&P 500 Emini Futures. You've earned the right to trade 5 contracts. So just to put on the trade, you need $5,000. You also need some cushion for your drawdowns and your stop outs, and that's the truth about trading. So let's say you're at the 5 contract level. Then what do you really need? If it takes $5,000 to put the trades on, I would say you need at least 1.5. Okay, so if you're trading 5 contracts, you need about $7,500 in the account. 75 to 10 grand. Don't have $20, $30, $40, $50,000 sitting up in that account, because in a flash crash, now this has happened before. It rarely ever happens, but man, you only need it to happen to you once. It can wipe you out. Okay, if your stop gets jumped, you know that whole saying about trading is risky. You could lose all of your money and then some. Okay. All right. So let's say the stop gets jumped. and you don't have enough money in your account to cover this. I've never seen them come after somebody for that money. Technically, I suppose they could, but boy, that'd be bad PR. So don't keep more money in your war chest. I don't like to call it a war chest because I don't like to think of the market as the enemy. But your operation, it's your operating expenses. That's what it is. Okay? Don't keep more money in the operation expense account than is necessary to do business today. And if you get with Bert, 866-928-3310, he could probably give you some ideas on how you could shuffle that money, because the idea is, let's say you do have 50 grand you've set aside for the purpose of trading. And if you only need 10 grand in the account because of the number of contracts you currently trade, then that other 40 grand needs to be in an, interest bearing is nice, but I mean, that doesn't amount to much these days. What you're really looking for is that FDIC insurance, so that your money is good as the FDIC can be. Because let's face it, every bank account in America is guaranteed for $250,000, I think it is. Well, if everybody tried to cash in that chip today, that dog would not hunt. They don't have that much money, but not everybody's going to get, stopped out on the same day that you do and have the flash crash. You follow me? Okay. So, and if Bert's not your broker, then I bet you he would still help you answer the question, because chances are, if you're with one of the big names, I'll call them, right? You can't get a broker on the phone. You might get an administrative assistant, but actually, some places aren't even answering the phone anymore. I'm serious. And I guess some of you are painfully aware of that. You got a problem? Fill out a support ticket. Send an email. No, you don't understand. I'm stuck in a trade. I'm hemorrhaging. My goodness, I'm down 30 points. Fill out a ticket. Or call 866-928-3310. Bert answers his phone during normal working hours. And if there's anything he can do to help you, like get you out of that position, which he can, he will. Think about it. Now, if you should decide to do business with Bert at Daniels Trading, Michael and I do not get a finder's fee. We don't get a split of the commissions. That would muddy the water. We like being able to tell you that they're the best because we really think they're the best, not because we're getting paid to say they're the best. I just think they're the best. Okay? All right. So you're not going to keep more money in there than necessary because of this. Now, when these types of exogenous events happen, this even applies to Fed announcements. When the excitement is over, what does the market do? I mean, unless it's something truly horrible, the market just goes back to doing whatever it was doing before it was interrupted. Okay? So we had an interruption. A lot of people got stopped out. Some people blew up their account because they did not have a hard physical stop in place. Think about it. You might have been working weeks, months, however long, right? You're doing good. Life's good. You're feeling good. Actually, you're starting to look good again. And in this, you did absolutely nothing wrong except you didn't have a hard stop in place. And so don't be the next fatality. Don't be the next casualty. Okay. I see a question in the chat box. Let me see what it says. Oh, from Ray. He says, one of our members, if you don't think you have what it takes to become a trader, please read Trading in the Zone before you throw in the towel. I promise you, you'll never look at the markets the same once you read that book. Okay? And then from Mike, D, you say if price can get through a lot. Do you mean ticking through or closing through that price, and at what time frame? Well, whatever time frame we're looking at, let's On the daily, okay, I want to see price close above 31.56 and a quarter on the daily chart. And all that does is it satisfies for me that price is actually trying to take out this swing high versus this swing low. So if it's on a 5 minute, I want to see it. I want to see a close above a certain area. If it's on a 1 minute, 30 minute. And if that doesn't answer the question, just let me know, Mike, and I'll rephrase it and explain it a different way. Or if you have additional questions, please just put them right in the chat box, and I'll be happy to answer them. Okay, so on the 30 minute, we had some big picture trade alerts last night. And John just jingled my phone. So we're going to pause here with the recap. I'm going to get his mic opened up, and when we're done talking with John, okay, we'll continue with the recap. And while we're talking with John, I'll put these up on the screen. I'll roll through them. On the ES, our big picture last night was 31.27 up to, we made it up above 31.40. Okay, the final trade to target's 31.65. But I'll walk you through. We had an ES, we had a big picture on the Dow, Russell. There's even a big picture on silver. Okay, so these are all available in the discussion group. You know what? I'll go over them in detail as soon as we finish talking with John. Let me get his mic open. Hey, John, welcome to the show.
Hi, thanks very much.
You bet.
It's interesting that sell-off we had last night and the rebound, the sudden rebound, is actually kind of bullish for the market, because it's sort of like a test of that 3060 area. And to be honest with you, we're in the middle of a kind of a melt-up right now, especially on the NASDAQ. Apple, it's going crazy today.
All-time historic highs. Apparently, investors are excited by some of the stuff that's being announced this week at the Worldwide Developers Conference. They're rolling out a new version of iOS. They've got a new operating system for the Mac. I think it's called Big Sur. So
yeah, I think the surprises are on the upside.
It
sort of tells you that they've been busy in spite of the pandemic and all the rest of it, which is amazing. And Amazon has blown through our previous target of 2,500. I think we said 3,000 next stop, and we're sort of on our way. The only thing is that when you get a kind of a sudden breakdown, like we did last night, very often there might be another one, and it could come at any time. So, because sometimes these manias have a habit of ending suddenly, and so you have to be mindful of that all the time. Just like you said, you need to have hard stops.
Yeah, I mean, this China trade deal, I'm surprised that there wasn't follow-through selling on soybeans this morning, because that was the culprit behind it.
I think the fact that it was sort of negated and kind of was encouraging.
This is going to have some long-term.
And remember, we've got the unemployment claims coming up in a couple of days on Thursday, and maybe the market's anticipating. When you get a move like this, the market knows something that we don't, and it's going up because of it. The other thing that's going on today, actually, before I mention this, why don't you put up NVTA? Okay, yes, you see what happened yesterday? This thing was $18 and had been basing out for a while. before this news came out yesterday, and somebody told me about this a while back, and look at how far it went, right?
Yep, I see it.
Okay, well, remember we said a while back that
Parabolic moves don't usually end well. This one actually seems to have had a happy ending. Wait, what time frame am I on? I think I'm on a 30-minute. Oh, I'm sorry.
Have a look at now. Put up INO.
Yeah, let me get this thing on a daily.
Okay.
Yeah,
you see how long it was going sideways? It's sort of driving you mad, waiting for something to happen, and then bang.
This one you're talking about on MBTA? Yeah. Okay, that's a daily chart, guys. So we had a gap, we had a parabolic move, and it stuck around for a second day. Now that's the exception, not the rule. So that's nice to see. Okay, so now INO.
Right.
Okay. There we go.
We're on day one, and it's a big day so far.
Did they have some kind of news or trials or?
Yeah, actually, fantastic news. They got 71 million from the Defense Department for some kind of a vaccine applicator that gets under the skin and maybe is a very what's the word? Kind of a non-painful way of delivering a vaccine potentially.
Okay.
And the fact that the Defense Department are buying a bunch of these for 71 million, I think, speaks volumes.
When I was in boot camp, it was the first time I had ever gotten a shot, because you got to get current on your shots to join the military. They used the air gun. I mean, as a kid growing up, we always got the needle, the standard hypodermic needle. But in the military, it was the first time this nurse comes out and she's got this thing kind of looks like a gun. And she says, turn your head, and just...
Yeah, it sounds like this is something similar, but might be, they've got all kinds of things these days.
That was such a long time ago. That's been
many
years.
Tiny little pricks you can't even feel, and then patches and all these other things. So there's a lot of ways.
Speaking of that, John, how do these sensors that people now put on themselves to monitor their blood sugar, so that they don't have to prick their finger? Do you know how those? Do you have any idea how those work?
DXCM. We actually mentioned this stock a long time ago. So DXCM.
Okay, did you hear my question?
Yeah. I was just answering it with this DXCM because it's become a very DX. It's become a very, very big deal.
Okay, does this have to do with blood sugar?
Yeah, it does. Yeah.
Gotcha. Okay.
And, I think we were talking about this when it was like 180
head and
or
shoulders. Yeah.
Look at it today.
Head.
It's more and more people are using this, who've got diabetes, and it's a really big deal because it actually sends your blood work to the doctor all the time. It kind of.
Yeah, that's exactly the kind of technology. I'm just curious how it does it without actually drawing blood. So I was curious if you knew. Dexcom is a company that develops, manufactures,
if you can put up the 5-year chart on that.
And distributes continuous glucose monitoring systems for diabetes management. Okay.
I mean, look at it. It's kind of going exponential, this thing. And, that's actually what I expect to happen with
INO. We can take out that previous resistance. Curious how the technology works.
All I can tell you is we definitely are in some sort of a melt up here right now, and the gold and silver continue to sort of what's the word, kind of claw their way higher and are looking closer and closer to a breakout. Incidentally, there's a very good article that came out this morning. From somebody I think it's basically with Jim Rickards, and basically saying that gold is going to do the unthinkable. It's done it before, going from 35 to 875, and basically saying that 10,000 is a very real possibility now for gold, even though it sounds like pie in the sky.
There's also an article out today about silver that it said something along the lines of investors are finding $18 silver more appealing than $1,800 gold.
Yeah, that's the sort of theory. When gold gets sort of too expensive, silver becomes the cheaper alternative. And over time, it tends to outperform gold and eventually, goes substantially higher than gold. Remember, from the 2001, from gold went from $5, I think it was, no, sorry, maybe it was higher. Maybe it was about $9, $8 or $9 to 50, right?
Mm-hmm.
And it was up 11-fold. So gold was only up 7-fold on the last run. So, if we go up 7-fold again on gold from here, obviously we're going to go, up towards 10,000 or so. And if the silver goes up 10-fold from here, then we're going to hit 180. So it's pretty potent. I actually think we'll go up about 10-fold from the 13.5 level, sort of 135. I think is a reasonable upside target for silver.
I was looking for that article from today, but this should be interesting to look at. This is an article that was published way back in March of 2016. Silver versus gold, 2 must-see charts. Okay, so guys, this is 4 years old, a little over 4 years old. Silver versus gold, 2 must-see charts.
Yeah. Listen, I better run, but thanks very much,
John,
Dwayne.
You betcha. Take care. See ya. From 1986 to 2016, gold eagles, 21 million. 500,000 silver eagles. Ratio is 61-1. Now this is 2016. Okay, now let me break it down like this when it comes to gold and silver. Let's say you have 100 grand and you fancy doubling that money, right? Okay. Doubling's good, right? All right, so let's do it this way. So if I'm gonna double my $100,000, let's go to gold. If I want to have exposure to precious metals and I have 100 grand and I'd like to someday see that turn into 200 grand, the current price of gold is $17.65. Now if I want to double my money, that means the price of gold has to double. So $17.65 times 2 is $3,530. Okay, so I got 100 grand. I hope to double it. I want to invest in precious metals. So I buy $100,000 worth of gold, the current price. And when gold reaches $3,530 per ounce, I'll now have $200,000 in my investment account. Everybody follow the math, follow the logic on that. Okay. Now, oh, by the way, gold has never traded at that price. I'm always more comfortable with trades that take me to a place where price has been before. Okay. So, silver, trading $17.92. So, I've got $100,000. I could put it in gold. I could put it in silver. If I put it in gold, I need gold to go to $3,530 an ounce so I can double my money. If I buy silver instead, then I need silver to go to $35.84 per ounce. As recently as 2011, silver traded at $50. I think it came just a hair. It was like $47.71. Okay. Okay, so I got 100,000. I'd like to double it by investing in precious metals. If I buy gold, I need gold to increase to $3,530 per ounce. And gold's never been there, by the way. Highest price we've ever seen on gold. The highest gold was ever traded looks like 1920, 1,920. Give or take, whatever. Call it 2 grand, okay? But I needed to actually trade 3,530 to double my investment. Everybody with me? So I'm asking gold to go someplace it's never gone before. Silver, now what I'm asking silver to do is to take me to 3584, which is a place it has been before. Now, which seems simpler? Which seems to be more likely? Which seems to have a higher probability? Which requires less sweat equity, right? Now, this is just a thought. Obviously, if you go out and buy silver or gold, that's not going to put any money in my pocket. And so this is just a discussion here between mature consenting adults. If you have a chunk of change and you do think precious metals is where you need to put some of that change, then don't rule silver out. Not saying you should go all in on silver, but I guess whatever you have to work with, if you split it between gold and silver, that might make sense, because the whole point of what I just said is that I think it's a higher probability at this point for silver to double as opposed to gold doubling. And I don't know that either one of them is going to double. So again, if you have any questions about what I said, or if you have another viewpoint, I would very much love to hear that. Just share your comments in the chat box, or if you just want to talk to the audience, in the chat box type mic please, M-I-C please, and I'll open up your mic if you have one, and you don't have to type the question or the comment. You can just share it with the audience. Okay. Okie doke. Let's get back to where we were. I think we were just getting started on the... Oh, we were talking about the big pictures. Okay. So S&P put in a swing high at 3145. So it hit the first target, the second target, the third target, plus 5 points. And the final target is 3165. Okay, so now let's go to the Concierge Trade Alert for last night on the S&P. Okay. Got them out at 6:10 p.m. Eastern. I try to get them out as soon as I can after the Globex Open each night. The numbers are good for the entire session, and we often see multiple triggers at the price. Okay? All right. So if you want to grab a screenshot, the best way I know is with the snipping tool. Although my wife taught me a method the other night that I wasn't familiar with. How did she do that? She held down the Windows key, and that little button on your keyboard, PRT, SCR, print screen. I think that's, let me see. Hold down the Windows key, print screen. Yeah, okay, I just took a shot of my whole desktop by holding down the Windows key, the little flag, and tapping print screen while I hold down the Windows key. Okay, here's how I typically do it. I just click New on the snipping tool. It's built into Windows. Hold down the left mouse button, drag, release the left mouse button. You now have an image that you can send as an email, you can copy it to your clipboard, or you can save it as an image. Okay? All right. So So everybody's got their screenshot. Okay. On the S&P, the long side, 3121. That's going to be right here. Let's drag it all the way across. 3121. Okay. So from 3121, we put in a swing high at 31.25 1/4. So that's 4 1/4 points. Earlier we were talking about, getting your goal for the day. When you first get your 2420 blueprint and you become a passport holder, as you work your way through the blueprint, you'll see that you're required to, or it's suggested that you create your business plan and your trading plan. And in both of those, you have to define who you want to become as a trader. Are you going to trade bell to bell? Are you going to trade every move that you see? Are you going to establish a goal, whatever that goal is, and then strive for that each day, and then once you reach it, put the mouse away? I'm just going to share this. Most of the successful traders that I know have a defined goal that they strive for each day, and once they reach that goal, they exercise discipline, self-control, and put the mouse away. But you can choose either one. You can be the guy with the daily goal, or you can be the guy who is going to just trade opportunities as they come. Okay? No right or wrong, just saying that I know more profitable traders who use the daily goal method as opposed to the ones that just trade bell to bell. Okay? So this first trigger last night, 3121 to 2475, that's 3 3/4 points. 3.75. So if you were a person who had a daily goal of 2 points or 3 points, then the market made that available on this move. Now again, we don't make these moves, right? The market does the heavy lifting. If you're old enough, you remember a time when you got to the movie theater late and the movie had already started. There was a guy with a uniform and a hat, so formal, right? Those were the days. Classy, classy. He had a flashlight. That was his tool of the trade. He would escort you into the darkened theater, and in an attempt not to disturb the other folks enjoying the movie, he would shine his flashlight at the floor so that you could get to a seat without falling over somebody else's feet. Movie theaters used to be packed, but because there's all these centerplexes, I mean, how many times lately have you gone to a movie, you're like the only person there? It's like you're in this giant living room, you can put your feet up on the back of the chair in front of you. Don't get caught. But there's nobody in there to complain. Especially like the afternoon matinees. When my wife and I first got together, we were pretty broke. And we would go to the dollar theaters during the summer. We didn't even really care what movie was playing that day or in that theater, because it was air conditioned. And I might have mentioned we were broke, but we didn't have air conditioning, and we lived in Phoenix. So yeah, good times, good times. That's where I saw Top Gun. That's where I saw Dirty Dancing. Just trying to, some of the great movies of the 80s, Back to the Future. Saw them all at the Dollar Theater, just trying to escape the heat. They turned out to be great moments in cinema history. Okay? All right. So we triggered once. We've got blue and climbing. If we look down here on our slingshot, we're blue and above the 50-yard line. So this nothing could be better. Very happy. Now, when price can't go any higher, resistance, it will go look for support. Now, this whole thing here, right? When it was done, the market just kind of went back to doing what it was doing before. But I mean, this really did happen. And I know that some people put the trades in as soon as the CTAs come out. They just go put in an order to buy 31.21, sell, in this case, 30.81, and they use OCO, not OSO. And OSO is what you use when you're doing a bracket. OCO, order cancels order. So in other words, I'm telling the market, price is just humming along right here. So I put in an order to buy 31.21 or to sell 30.81. And whichever one triggers, the platform knows to cancel the other one. Okay. So some people, I'm sure, got triggered into this, but hopefully you were able to react quick enough to take your profit at the previous swing low or at the weekly trading zone, because down she goes and right back up. In fact, let's look at that on a 5-minute chart, why don't we? And see just how long it took. These are 30-minute candles, but what happened inside of the 30-minute candle? There's a big picture trade alert on silver in the discussion group channel for anyone that's interested. So I'm going to take the silver chart down now. Replace it with the S&P. We'll go to a 5-minute. All right. So it took, once the sell-off was underway, once we took out this swing low right here, okay, 5, 10, 15, it took 20 minutes to put in the low, and then to get back to basically where we were before it happened. 5, 10, 15, 20, 29. That's a really fast recovery. Okay, markets don't typically recover as fast as they sell off. Financial gravity. But because the market quickly discounted the importance of that cancel, I mean, that deal's been hanging out there for so long, I think most people probably given up hope on it anyway, or just figured out, we've lived this long without it. I guess we have more important things on our plate, rioting in the streets, a virus that doesn't want to go away, all that stuff. All right, so now we know what happened inside of the 30-minute candle. So if you triggered into this, it dropped 8 points at $50 a point, $400 per contract traded. Now, it dropped further than 8 points, but I'm talking about where you would have potentially had your stop loss, right? Last week's weekly zone, because today's only Tuesday. So the gray lines are this week, the yellow lines are last week, and they're still very much, still providing great guidance, okay? So we recover from that sell-off, and we trigger 31.21 again. Questions to ask myself, because remember I said you always want to go look at the chart. Don't ever trade an alert just because it's an alert, because the dynamics of the market may have changed since the alert went out. Perfect example. See this swing high right here? 31.2075. It didn't actually trigger, okay? But what if it had? Well, that's not a trade you would have taken. Well, why not? Because you've got red and falling. Okay? That's a weight on the market. That's heavy. That's resistance. It's bearish, right? If you're going to take a long trade, you want a full cast of supporting characters that are blue and climbing, or blue and above the 50-yard line. So here you don't have that. Here you do. Okay? See how red and falling? You came down to the BBC, found good support. That's what we expect. Got above this weekly trading zone. Important. And then we triggered, and we rode the back, blue and climbing, all the way up. Okay? Now, down here, yes, it turned red. However, we stayed above the 50-yard line. Now, for me, on the 30-minute chart, I place more importance on where the cycle is, not what color it is. On a long trade, would I prefer to have blue above the 50? Yes. will I accept red as long as it's above the 50-yard line? Yes. And if you have that multicolored 50-yard line, if you double click it and open up the properties box, scroll up, it says red and green. Just change those like I have done to white. Okay. Now you'll have because those colors in the 50-yard line mean nothing. That's just a hangover from some work Michael and I did a long time ago. Okay? All right. So good trigger, not a good trigger, good trigger. Then price reaches down. Okay? Now this one's a little bit tricky. The swing low, 31.20 1/4. So it officially dipped below the trigger. But you're printing a red candle. Okay? Remember, this was a big red candle, came all the way down. By the time the 30-minute candle finished, it had bounced this much. So I would tell you that good trigger, not a good trigger, good trigger, very questionable. In fact, just call it no bueno, okay? Because you're painting a big red candle. I mean, getting long right here would just be, you know, how do you know that thing not going to just keep running, right? So, 2 rock solid entries for the long side. 1 entry on the short side. Okay. So that covers it. Joe got a question on the alerts on the 30-minute chart. Are you still making sure the MA1 is above the BBC, or is price trading above the BBC sufficient to go long? Joe, can you give me an example? I mean, I think you're looking at some particular move on your chart. If you can tell me where that is, like if you just say S&P 930 Eastern. So let me read the question again. On the alerts on the 30-minute chart, you're still making sure the MA1 is above the BBC. Well, if price is above the BBC, price is above the BBC, the MA1 is going to be above it. Except like right here, okay? See, price gets above. Now it takes a couple candles for the bullish cross to happen. So I guess what your question is should you wait for the bullish or bearish cross? You don't have to. No. Now, because of the... Okay, Joe asks again, your chart, I thought you showed a long trigger with price candle above the BBC, but the MA1 was still below. Okay, well, this is the only one I've recapped so far. So, price and the CFMA1 are above the BBC. All of these are above the BBC. So, whether you wait for the confirmation for the actual cross, that's a matter of personal preference. The longer you wait, the more risk the trade is going to require if you use our 3-step methodology for establishing your stop loss. I'm thinking that's kind of a, you said it's an alert question, but it almost sounds like that's leaning more towards the range chart that we use in the training room. See here, everything's above the BBC. Over here on this short from yesterday, everything was below. Oh, okay, right here. So I can use this as an example, okay? The CFMA1 was way above the BBC, and then we hit this trigger, right? Now, the only way you would have ever gotten into this trade, most likely, well, I don't know, it shows up on a 5-minute, 3081. So if you look at your smaller time frame, which you do to time your entry, so you have the minimal amount of risk. 3081, okay. So actually, this is very tradable on a 5-minute chart. 5, 10, 15, 20. You got red and falling at your back. You're below the BBC. Both your CFMA1 and price are below the BBC. So this is a perfect trade opportunity. Yeah. I'm glad you brought that up. Okay, Tim asked, 3152 alert trigger. Verbal trigger notice during Michael's show. 3148. I'm not sure what your question is, Tim. 3152 alert trigger. Verbal trigger notice during Michael's show, 3148 question mark. Okay, Joe says that's exactly what he was referring to when he asked the question. Okay, so does everybody see how, okay, the CFMA1, which I call blue and climbing, red and falling, was above the BBC. But when we drill down, everything's perfectly aligned. Okay. So now back to Tim's question. You said 3148, comma 3152 alert. What one good? Oh. So are you asking me about what's happening right now? Well, there's an alert in the channel, I think. Let me look. Well, you got a swing high right here at 3147. Okay. So do I have an alert out? 31. You can enter at 3148. Not immediate resistance if we scroll way back. Can't see that. Let me scroll back. Okay, there it is. So we had a swing high that reached 3156. Okay. The price right now is 3142. Well, I mean, this thing's tradable from 44. No, a little tight. You know, 3148. There's nothing wrong with that entry. And the 3152. The thing you want to be aware of is you got potential resistance at 3156 and a quarter. So I would call that 3155. So I'll come over here. Potential resistance 3155. Okay. So I like 3150, or yeah, split the difference. You say I mentioned 3148, I mentioned 3152, split the difference, call it 3150. 3150 to 3155, and if you can get through 3155, then it's got a shot at running all the way to the next zone overhead. Weekly zone at 3169/70. Does that answer the question, Tim? Oh, you thought that's what Joe was asking. Okay. Well, good. Well, I'm glad we went through this anyway. So consider being long, 3150 to 3155. Potential resistance at 3155. And then weekly zone overhead, 3169. And then let me check one more thing. ES. You've also got another important number at 3170, Tim, along with that weekly trading zone, okay, that I sent you, okay? All right. Okay, so back to the recap. Okay. So we just, now this second trigger, from 3121 to 3132, which was last week's zone, 21 to 32, that's 11 points, $50 a point, it's $550 per contract traded. Okay. And then we established why this was not a good trigger. Okay. Now to the Dow, same thing, yellow line, last week's zone, gray lines, this week's zone. And last night's trigger for the ES, I'm sorry, for the YM, long 26095. And that swing high is 101. That's 6 points. No bueno. 26095. Now, on this one, you've got blue and climbing. You have blue and climbing here, okay? But here's what happened. This became that. This bearish cross became that resistance. Honestly, I'm surprised I didn't put it a little above that. I must have been in a hurry. Okay, so that's all right. We pulled back. Okay, on the short side, it was 25605. I'm not going to elaborate on this because I don't think many of you were probably in this trade. No, you might have been. It was a good trade. It took 25 minutes to unfold. But that was a short trigger. Okay, so we trigger second time. Now, this time we put in an initial swing high up at 184. So that's 200 points at $5 a point. It's $1,000 per contract traded. Then let's see, buy 26095. We almost made it to last week's zone at 320. So this is a 200. This is a 200-point move at $5 a point, $1,000 per contract traded. Now, price rode the back, blue and climbing, started to walk a little sideways here. The step line actually crossed over. Okay. Now, here's one where the close below the step line, it took you way back towards the trigger. Okay? You don't have to let it deteriorate that much. Okay? We know that when a candle on a long trade, when the step line crosses, the first red candle that closes below the step line is your exit signal, right? But you're free to exit the trade, when the writing's on the wall, so to speak. You can stick it out to see if it turns around. And on the pullback to the BBC, it did hold, it did turn around, not with much vim or vigor. But the difference between this trade and this trade is you got blue and climbing, you got red and falling. Love to be a part of this, don't want any part of this. Now, once price closes on the other side of red and falling, okay, now you do have a window of opportunity. You want to see a close above red and falling, and then an open above red and an open above red and falling. Because by 2 more candles, if we move higher, this is going to become blue and climbing, right? So you got to get above red and falling, open and close, and then you could consider being long 26,200 up to 26,250. That's a 50-point move, $5 a point, $250 per contract traded. Okay. Okay. Now, the big picture on the Dow last night, that was published in the channel, it's right here. $26,120 to 140 to 180 to 300. We came just shy of 300. What's that high? 294. Okay. So 120 to 300, that's 180 points at $5 a point. That's almost $1,000 per contract traded. And we've still got 2 more targets, 26,400, 26,600. Okay. On these big picture trades, when price runs into resistance, especially when it's right where you expect it to be, why do we expect this to be resistance? Well, because it was before. Okay. Any other reasons? Yeah. Last week's weekly trading zone. It's early in the week. Okay. So you can take profit here. If you're in that big picture move, you could take profit here. Let price pull back to the BBC, weekly trading zone, find support, do exactly what it's doing. Get long again. 26,210. 26,280, that's 60 points, $50 a point, $300 per contract traded. Okay, you can be as conservative or aggressive as you want to with this area here because you have no obstacles. Okay. All right. So that covers the Dow. Let's go to the Russell. On the Russell. Here, let me just go and show you the big picture on the Russell while I've got this part of it out, because I keep having to switch back and forth between folders. The Russell, 1443 to 45 to 50 to 60. We made it to 60. Okay. Then we know we got a weekly zone at 64. If we can get above that weekly zone, then the next target's 70 and then 80. Okay. But we did the 43 to 60 dance, so that's 17 points at $50 a point. That's $850 per contract traded. Okay. And the NQ we're going to go to in a minute. That's basically a 170-point trade if it makes it to the final target. Entry to final target, 70 points, $20 a point, $1,400 per contract trade. Let's just peek and see what the NQ printed for the high today. Okay, we exceeded. No? Yes, we exceeded the final target. The final target in the NQ is 102.30, and we're $1,200 above this. 12. So far this thing has gone $2,600 per contract. The final target was just $1,400, but it's gone 60 points beyond the final target, and it pays $20 a point. Okay, now Concierge Trade Alert for the Russell last night. Consider being a long 1439. So that's in here or somewhere. 1439. Okay. So the first one took us to 1440.70. The next one took us to last week's zone, which caused us to pull back. A little bit of resistance. We pulled back to blue and climbing, and then off we go again. So the end result is from 39, we went to 59, so that's 20 points on the Russell. At $50 a point, that's $1,000 per contract traded. Now we're triggering again, but this is a different trigger. Why? Okay, over here you got balloon climbing. Right now you're trying to, you on this trigger, right? It's already triggered, but you're below the BBC. See, over here you're above the BBC, and you got balloon climbing, and you're above the 50-yard line, right? Whole different story here. As you trigger, you got the BBC overhead, got red and falling overhead, and now we're actually below the 50-yard line. Okay, so that's the story there. NQ. Concierge Trade Alert for the NQ is to be long 101.42. So that's going to be down here, I guess. 101.42. Okay, so that's 8 points, $20 a point, $160 per contract traded. But that led us into the big picture. And so, well, we just covered how much the NQ's up. It's like $2,500 per contract traded based on those entries. Okay, so the only thing we haven't covered crude. All right, last night's long alert on crude, 40.90. $40.90. And it ran up through last week's zone and topped out at this week's zone. We talked about this morning in the pre-market strategy session. See how we're climbing the back of blue and climbing? Okay, so from 40.90 we went to 41.50. That's $600 per contract traded. This trigger, you got red and falling overhead, and you're below the BBC. So I would not be interested in this trigger. Very much interested in this trigger. The short side for crude, 39.80. Haven't got there yet. I think was that this swing low? 39.76. Yep. And you see where this bullish cross took place, and you see where the swing low was last night. Wah, wah, right? Happens all the time. Now, not every bullish or bearish cross has that impact. It's the bullish and bearish cross that leads to a significant move. Bullish cross, significant move. Bearish cross, not really a significant move. Bullish cross, significant move. Bearish cross, significant move. So see how this one and this one are important. This one here, where it's just like trapped in all this noise, not so much. Okay. All right, last one, gold. On gold, the alert last night was to be long 1772. $17.72. And from 72, the market ran up to 86. So that's $1,400 per contract traded. If you've earned the right to trade 10 contracts, that's a $14,000 move. Trade and sim until you put together 10 consecutive days in a row where you reach your goal in 10 trades or less. It's time to go live. You only go live with one contract. The goal is then to increase your account balance by $2,000 or enough to pay for the second contract. And you're going to trade 2. You're going to build up some cash reserves. When the blueprint says now, you add your third contract with profit you earn in the market. Okay? And if the blueprint is telling you it's time to add a contract and you don't have profit to underwrite that contract, then you don't add the contract. Okay? You book a strategy session, and then hopefully we can help you figure out why. Okay? All right. So I've already given you the recap on the logic. We can take a stroll through it real quick. Scroll up. It's been a busy 2 days. The market has sent lots of opportunity our way. Last week, week 98, had a total of 82 alerts, 19 never triggered, 63 actionable, 5% stopped out, based on not risking more than $300 per contract per trade, less when possible. So Sunday night, 6 p.m. Eastern, 2 days ago, we started out with a gap fill trade on the ES, Dow, Russell, NQ. That's our favorite Sunday night go-to trade. When the market hands us a gap, love that. Okay, it's gold. So you don't see a lot of gaps in futures. When you do, it's typically a good opportunity available. It's crude and gold. And we had a couple that did not trigger. Russell found its target. No trigger, no trigger. Stop out on the S&P. Dow, Russell, S&P, Dow. There's the copper trade. Those of you that traded that copper alert, you did good. No trigger there on crude, stop out on gold. Now we're into Monday. All that was Sunday night. Everything I just went through was Sunday night. Now here's Monday. Now remember, you're not expected to trade all these. Just use one of them to get your goal for the day. And learn how to find them yourself in the process. This is all still Monday. Now we just rolled into Tuesday. Today. This is how we do it. Okay? Alright. Good word for the day. We'll talk about the Apple Developers Conference tomorrow. You look tired. Integrity. Luke 19:8 says, Zacchaeus stood up and said to the Lord, Look, Lord, hearing now I give half of my possessions to the poor, and if I have cheated anybody out of anything, I will pay back 4 times that amount. Now, Zacchaeus, as you recall, was the fellow in the tree, short fellow. Couldn't see over the crowd, so he climbed up in the tree. Zacchaeus was a tax collector, and back in that day, the most hated man in the village was the tax collector. Times have changed, right? Zacchaeus got rich by taking more taxes from people than his Roman masters demanded, and he pocketed the difference. That's how he feathered his nest. But after he met Jesus, he said in Luke 19:8, if I have cheated people on their taxes, I will give them back 4 times as much. And Jesus said in Luke 19:9, red letter, salvation has come to his home, to this home today. So, integrity. Integrity isn't about regret or seeking to minimize painful consequences or even attempting to do damage control. Integrity is what you do when nobody else is looking. Integrity is about honest repentance, making amends, and living your life in a way that guarantees you things will go differently. Did he just say that? I did. Integrity is about honest repentance, making amends, and living in such a way that guarantees you'll do things differently in the future. See, we cannot solve our problems with the same thinking that created them. Whatever brought you here won't take you there. Something to think about. Greg Laurie, some of you folks probably know who he is, asked the question, what is integrity? His answer, it's really the same as having character. Which is not the same as somebody says, man, you're a real character. Different character. D.L. Moody defined integrity as what you are in the dark. In other words, it's what you do when nobody's looking. When there's nobody around to impress. It's the real us. Humorist Will Rogers once said, so live that you would not mind selling your pet parrot to the town gossip. That's the idea of integrity. Like people are always going, hey man, don't you know Alexa's always listening? Yeah. Sometimes I might slip up and say a little 4-letter word. Try not to ever do that, but stub your toe kind of thing. I mean, I'm not a secret agent. I don't work for any foreign powers. So if Alexa hears me talking to my wife about what we're having for dinner, or me telling my son to go clean up his room, or me talking on the phone with you, or she hears me doing mentoring sessions, I mean, I understand it's an invasion of privacy, but if I want to say something private, right, then I'll leave the room where Alexa is. It's just that I don't, I would have to think hard about when's the last time I said something that I would not want Alexa to hear. When I used to train salesmen most of my life, in the bullpen, in call centers, when people would go, well, is it okay to say this? Or can we say this? Salesmen always wanted to push the envelope. I said, here's the mentality I want you to have. When you're on the phone talking with a potential client, I want you to imagine that the Attorney General and your mother are both listening in on the call. Suddenly the gray areas became black and white real quick. The Bible says in Proverbs 11:3, the integrity of the upright shall guide them. Rebuilding your integrity means humbly acknowledging that sometimes your thoughts aren't fit to print, or that you hurt someone and need to make things right, or that you're going to stop cheating your employer or the tax man. Integrity is who you are when nobody's looking. In Job 31:4, Job said, does he not see my ways? If I have walked with falsehood, or if my foot has hastened to deceit, let me be weighed on honest scales, that God may know my integrity. Start today. Rebuild your integrity and hang on to it. Because when you leave this world, the only thing you're going to take with you is who you were. I've never seen a U-Haul following a hearse. We're going to leave it all behind. When we stand before God, all we're allowed to bring with us is who we were. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.